what are the opportunities going into 2025?
I think there's actually like a lot of green shoots in venture. Now it's crypto venture is sort of a separate thing that's distinct from just having a major crypto allocation. The same way you might hold QQQ and then you would also, be an LP in Sequoia or something.
You want to know something insane?
Yes.
Well, ladies and gentlemen, we want to thank Tom Schmidt for being the first guest of the year. He's on the other side of the mic, obviously. Longtime investor at Dragonfly and a friend of the show. First time that we've had you on the program because Haseeb he's the scoop hog, as it were.
He's a yapper, and I respect it though. Yeah, we all got to play our parts. I'm like the Abbott, he's the Costello, or other way around. I don't know.
Exactly. Whichever one's better looking, I guess we can give to you. Yeah. But you guys can fight over that, I suppose, that title. But yes, this has been a long time coming, and what a better way. I mean, now you've one-upped him being the first guest of the year. I mean, that's not something that we just hand out like chocolate. There's really only 5 or 6 other folks that have started a season, so you're in good company. But let's dig into it, right? I mean, we can. I know you're in private markets mostly, but we can talk about sort of this theme of crypto entering 2025 as an institutional asset. And with that being said, with that new fact, right? It means that the stuff that drives normal markets, traditional markets, is going to drive crypto. And so I feel like there's a lot of head scratching and confusion, and people are trying to pinpoint what exactly is happening. Is the political environment not going to be as rosy as we were anticipating? Are the underpinning theses or use cases not going to play out? When it really just boils down to probably the fact that we really don't know if inflation's under control.
I think that's actually pretty well said. I think Bitcoin specifically has been this asset where the narrative feel like it's changed. Every 4 years, you could probably make like a nice little time series of it. And I think kind of the current incarnation is it's some sort of blend of a little bit of digital gold. Like we do see a little bit of correlation there, but it's also just a risk asset, right? And obviously, it's greatly affected by interest rates. And when you see like the further end of the curve kind of blowing out, and tech selling off, Bitcoin sells off as well. Mm-hmm. Again, kind of like we were saying, in some ways that's very heartening. In that I feel like, okay, you actually have more sophisticated institutional players pricing these things instead of script kiddies trading on Mt. Gox and moving markets dramatically for something very small. But the downside then is when it comes to thinking about this in terms of your portfolio, I think a large part of the story for Bitcoin historically has been diversification. It's a separate, different thing than what you have already, and it looks a little bit less like that these days. But obviously, still, I would not be surprised if the narrative changes even 3-4 years from now. And I think the fact that it's come this far already is like pretty incredible, and it's easy to forget, and you have to kind of take a moment here and there to appreciate kind of how far the industry has come and how far Bitcoin has come as an asset.
Let's maybe explore how that impacts private markets. It's a tough time to raise as a fund. I know that a lot of funds are maybe at the end of their deployment cycle and maybe want to raise a new fund. And if you're not one of those blue chip allocators, it's probably going to be difficult for you to raise in this environment. There were some cool charts that the FT put out. I think it was last week.
Saw that.
That illustrated that, and this is encompassing all new fund launches. We're really at a bottom in terms of new managers entering market, as well. I think new just fundraisers in general, not even just amongst new managers entering market. I assume crypto mirrors that. But walk us through, has it always mirrored traditional venture capital trends and themes? And what do you expect for 2025? I mean, you can't really get any lower than this, Tom, you would think.
You would think. Yeah, I think this is the story of private markets in crypto. I would say um, the way crypto funds are structured has evolved again over time. If you go all the way back, say 10 years ago to kind of Pantera one and Polychain one, um, these look more like hedge funds, right? And that was kind of how I think LPs viewed them: is crypto is this weird new asset. I don't really know how to hold it, what I should be buying, if I can even buy it. And so you invest into a fund that will be your crypto exposure for you. And a lot of those, funds held a lot of, Bitcoin or ETH or, things we would consider majors now, in addition to maybe some, private investments or some long tail investments. I think that really kind of started to die out, and the industry started to specialize around kind of 2018, 2019. Even thinking back to our early vintage, yeah, we had Bitcoin and ETH, because that was kind of how LPs I think viewed these kinds of vehicles. Now, I mean, even with the ETF, even before the ETF launch, I think LPs were a lot more sophisticated, and there were a lot more ways for them to get access to Bitcoin without having to pay 2 and 20 to a fund manager. And for us, in some ways, these assets are kind of drags on the portfolio,
So
right?
let me just break that down for a second because it's quite interesting. So when we think back to the vintage fund of like a Polychain or a Pantera or even Dragonfly, so we're thinking for the former two, maybe that's 2013, 2014. I'm not quite sure when those funds launched. You guys were 2017, if I recall correctly. And in a sense, for institutional allocators, these were basically like proxies to what ETFs are now, except we're asking you guys to figure out what is the breakdown of allocation between ETH and Bitcoin, and maybe at the time some other long tails. Whatever was the token du jour of 2014, maybe it was IOTA or something, and then in 2017 maybe it was 2018. Obviously, Solana came or were they 2020? Anyway, be that as it may, basically just a way to access the liquid market without having to maybe think about opening up a Coinbase account. You got to think the institutional custody product at Coinbase was quite nascent in 2018. Is that basically what you're sort of describing there?
Yeah, I would say that's generally how it's structured. And these were not there was a lot of discretion involved too, right? These were not necessarily 100% long only kind of mutual fund almost style vehicles. There was some discretion around when to buy, when to sell. But there's an expectation that people thought of this as their crypto exposure, and that sort of encompassed everything.
So how do we shift from you kind of, there's some discretion involved in terms of how to allocate, but it was basically bottom line much more liquid focused than it evolved. So how did we go from that state of the market to where we are today?
Yeah, I think it was sort of a push and pull factor. One being there were more easy ways for LPs to access majors, even pre ETFs, private placement funds, going through a qualified custodian to actually hold on to the asset, and just general kind of acceptance of Bitcoin, or ETH or majors as a real asset. And then two, for fund managers, I can't speak to how funds were benchmarked in 2014, but maybe for the past 5 years, you're often referenced not just alongside other funds of your vintage or other funds of your size, but also against Bitcoin or ETH or an index like the Bitwise index. And in that regard, holding Bitcoin on your balance sheet or holding ETH on your balance sheet in the fund is a drag on performance. Because if you're trying to beat Bitcoin, it's really hard to do that if you're just holding Bitcoin. And granted, again, some funds are pure liquid vehicles and they're trading in and out of positions. But if you're taking a venture approach, closed-ended vehicle like us, and a lot of other funds, it's kind of disadvantageous. And again, I think LPs sort of view this almost as a different offering now, where previously it was crypto, and now it's crypto venture is sort of a separate thing that's distinct from just having a major crypto allocation. The same way you might hold QQQ, and then you would also be an LP in Sequoia or something. I think that's kind of how the market is playing out a bit. I think the article you're referencing from FT, I was also reading. I think actually echoing or I think mirroring a lot of what I'm seeing in the market, which is sort of this decline in venture funding, concentration into blue chip larger funds. It's really hard for first time fund managers to do a new fund. Um, Again, part of that is macro. I think part of it was I think venture was frankly just probably over allocated in
Mm.
2021, 2022. I think that was a little bit of like a aberration versus something that was going to become kind of the new norm.
ZERP.
Yes, a little zerpy for sure. Um, I think in that regard, and you see this a little bit in crypto venture too, when you look at new funds that are getting announced. I think Paradigm just announced a new fund, and it was less than half the size of their old fund. Um, I think again that's reflective of the macro environment, but I also think it's healthy for the industry. I think a lot of
Mhm.
these big funds ended up having a lot of trouble deploying, created these weird distortions in the market. I think it's hard for the teams themselves to manage that, manage their portfolio. So this feels just like a normal correction versus something that's sort of a death spiral for the industry. But I also think crypto venture again is breaking out this separate asset class because I think there are expectations from LPs that there's going to be uh, distributions earlier on in the fund life than you would for traditional venture. Traditional venture, it's a 10-year fund. You're not seeing distributions until much further at the end of it, and then sometimes even then you still have some illiquid assets. Crypto, let's say you have that, and so therefore I think for LPs when they're thinking about their exposure, it is somewhat more attractive than traditional venture, and a lot of those 2020 vintages, 2021 vintages from traditional venture still haven't generated any cash for LPs. So it's harder to come back to market when you just have sort of paper marks in your books.
I hope that listeners can forgive me for being so keen to harken back to the Hasleon days of 2021. But I want to just touch on this point of the distortions that you're talking about here because I think they still manifest in the market today. When you have sort of outsized venture capital participating in the market relative to liquid or other types of market participants, it results in perhaps this a short-termism. But I'm sure there's a long list of distortions or sort of idiosyncrasies that existed in crypto from that period of time up until present that are interesting. Maybe we can walk through those, and then we can finally talk about what's going to happen.
Yeah, absolutely. I think that's right. I mean, the general answer is I think this stuff generally, markets are self-correcting. Just the time that it takes to self-correct can sometimes be longer or shorter than you would have imagined. Um, I think for on the fund side, sort of the manifestations or sort of the remnants of 2021 that we see are funds that hit a high water mark in, let's say, 2022 and have not been able to surpass it in subsequent years.
Mm,
And they face redemptions. They have no carry for staff, and so the staff leaves. And this
yeah,
is a classic sort of death spiral component in traditional finance. Also very true for crypto, and I think that's kind of what you've seen in maybe some of the names from that era without naming names specifically, but again it's sort of a byproduct of the market. This also I would say sort of the equivalent for startups. You see where someone raised a large amount of money at a
sure.
crazy valuation from that time. Private markets are different from public markets in that sometimes when you see something that is well below a previous price in public markets, you would think, hey, maybe this is a deal, maybe this is really attractive to buy now. In private markets, sometimes that is also true, to be clear, but in some ways that also makes the product less attractive, in that now that the team is stacked under a bunch of a bunch of investors who have liquidation preference before them. Hey, maybe there was it's sort of like you are paying to sort of reveal more information about the company, and when someone has spent 20-30 million dollars and sort of not be able to show a lot for it, it's like, okay, well I've kind of played out one of these futures, and maybe this is less attractive than I would have thought. Requires a lot of sort of surgery to kind of get a company like that kind of on the tracks again. And you do see companies I think that went down that path and actually played it really well and made a great product and executed well. And I mean those are kind of the winners that we're talking about now coming out of the bear, and they're being rewarded for shipping and executing and finding product market fit. But we've also seen teams that build through the bear, don't have that look, and end up winding down or getting acquired, have difficulty fundraising because again, it's you look at it and there's a lot of sort of baggage to the deal, and I think that is in some ways less attractive.
It's funny when Bitcoin was hitting its all-time highs in 2021, it was almost like every day you saw a new unicorn come to market. And this is what you're talking about. This is sort of the other side of this theme of high watermarks. They're kind of, you know, all working at, and despite Bitcoin being at new all-time highs, probably nowhere close to hitting those valuations again. What, again, we're looking back, but what was it about the enthusiasm that underpinned the last cycle that allowed, you know, Frank uh, Custody LLC to raise at a $5 billion valuation at 52,000 Bitcoin price, and now here we are at 100. And I mean, I'm not. I maybe I maybe shored up the business. I don't need a raise, but I certainly am not going to be valued at 5 billion. Maybe not even one. Why is it?
Yeah, I mean, a lot of these companies were reluctant to go out to raise, and still are. I think, and a lot of them have tried to focus on profitability instead to extend their runway. I think going back to kind of what we were saying earlier, it does all feel a little bit one trade like in that okay, interest rates come down, you have really low cost of capital. Multiples even in public markets went crazy. This was sort of SPAC era. This was Zoom trading at
Mhm.
400 times earnings era. And then that obviously trickles down into private markets because people look for references, they look for comps, they think about where things can trade if they do go public, or for VCs, hey, if this thing does launch a token, where could it trade by looking at comps? And I think ultimately when sort of the gas is taken off the pedal, multiples compress. There's less cash flowing into the system. There's less dollar liquidity. Like all these things are sort of downstream from that. And so we're sort of in our house and wondering, hey, why is the faucet dry? And it's like, well, the lake that was feeding the city dried up 3 months ago, and you're kind of seeing the downstream effect of that. And so I think that's kind of a boring answer, but I think that is kind of the answer. Again, I think some teams were able to play that really well and extend the runway, become profitable. I think spend wisely, but I think a lot of teams did not, and now they're trying to come back to the market. It's not looking as favorable, and
Mhm.
it's not as easy as you do a new round at maybe an adjusted valuation, because in some ways that additional capital, it's dilutive. It creates this sort of weight in the form of liquidation preference on top of the founders and the team. And so it's just a question of, hey, how do you make this math work, and how do you make these numbers work? And sometimes that's just a difficult conversation.
So with the lake being a bit more dried up, to extend the metaphor, what are the opportunities going into 2025? Who's able to, uh, you know, get close to shore, as it were, and fill up their buckets?
Yeah, I think new companies that I think have had again fresh cap tables and don't have this sort of overhang problem, I think have done really well. And I think there's actually been some moderate frothiness in that market if you look at
In
where
the early
companies in.
stage, in the early stage segment.
Yeah, but even in Series A, we see teams raising at I think pretty aggressive valuations if they're in
Sure,
a
sure, sure,
pretty
sure,
hot
sure.
sector. I think also we've just seen more teams focus on revenue and profitability. In the past, let's say year or 2 years, and you kind of see that. Like you think a lot of the breakout winners from this past year, it's been companies and applications that are extremely profitable. You look at someone like Pump, you look at someone like Photon. These
Sure.
companies are making hundreds of millions of dollars,
Yeah.
which are insane. Um, versus, hey, we make something that's totally unprofitable when we drive all the margin into growth. Um, I think that still can be a decent recipe for some companies, especially companies that depend on some sort of critical mass of a user base or some sort of network effect, and you really need to drive it to hit scale, otherwise it's not valuable. But for sort of single player mode, companies, maybe that isn't actually the answer. And I think being in charge of your own destiny kind of gives you a lot more freedom in terms of when do I raise, when do I not raise, when do I scale up, when do I not scale.
Yeah, so like I mean, what you're talking about, like that Series A stage, like really the poster children of we saw a little glimmer of the frothiness of 2021, maybe in like the mania around Barachain and Monad. But that seems to be, is that an aberration versus
I don't think so. I mean, I think again, scale is also important. It's kind of like when people talk about meme coins, and I think meme coins dominate a lot of the mind share of crypto Twitter people, even in mainstream
Mhm.
media. I think they generate funny headlines. People love to talk about fartcoin, but in absolute terms, these are quite small, right? You're talking like single digit percentage of total volume on exchanges, and so it's I think sometimes you see big funding rounds or big numbers, but um, these are so rare compared to 2021. And I think also again people look at comps and they're like, hey, well, if public chain XYZ is trading at $100 billion, if you think about a sort of probability weighted outcome for something that has amazing tech, they're doing something breakthrough. It's not kind of copy paste, like kind of again what you maybe saw in 2021. It doesn't seem as unreasonable to think about, a valuation like monads. And so, I think, this conversation has been like a little doom and gloomy, but I think there's actually like a lot of green shoots in venture. I think teams are being a lot more reasonable with the amount that they're raising, the valuations. I think the investors that are at the table are also much more in tune with the industry. I think 2021, you also forget we had a lot of crossover funds getting into crypto. You had SoftBank and Tiger doing investments in crypto, and when I would talk to some of the folks that were working on these desks, it was kind of shocking in some ways how little they understood about a lot of the underlying technology or a lot of the underlying tech. And I think I think a lot of those players are still kind of on the sidelines, which is I think again probably good. You
that's
probably want people
probably
who
good, right? Because
yes.
that kind of drove a bit of the unbridled or uncapped valuations that we saw because everybody was elbowing their way in, as it were.
Yeah,
Um,
agreed.
do you think that given the sort of you really put it well in saying that like you have these public market comps to justify to an extent the higher valuations of some of these you know base protocol level projects. So if I'm a founder, I'm more inclined to do that because there's more upside than doing an application, which we don't have too many unicorns that are just an application of on top of a layer one. Um, does that change in 2025?
Yeah, I would say yes and no. I think part of the issue with applications so far has been a lack of path towards liquidity. So, like I mentioned, there are a number of applications, mostly kind of wallet and trading interfaces in the past year that are in the 100 million plus revenue club. Um, Great for the team on paper, great for investors. The question is, how do you realize liquidity? And I think the IPO market is still quite cold. Not even a crypto specific problem. It's a
Mm,
general sort of equities market problem. And even if it were warmer, there's still a question of could these companies even um, IPO in the U.S. It seems
hmm
kind of there's still a lot of regulatory uncertainty around that for some of these companies, and for a lot of the companies that issue tokens, um, a lot of them have difficulty getting listed on centralized exchanges, which is again this sort of liquidity capital market structure problem where if you don't have buyers, you don't have flows, you're not going to get a great outcome for your token. And so they're sort of stuck in this weird position where on paper they could be great companies, they're generating a ton of revenue, they're really sticky, but in practice, it's not clear how investors sort of realize this investment, which I think then deters sort of upstream flows into these types of companies. So it's sort of like again, the lake is sort of dry because it's not clear how investors would actually realize any of these investments. I think that will change. This feels like a weird, unnatural equilibrium in the market right now for companies with clear PMF to not be able to raise more capital, or from that sector to be kind of under allocated. But it's understandable why it kind of is right now.
Do you want to know something insane?
Yes.
In 2024, the fourth quarter of the year outperformed the three preceding quarters in terms of new initial public offering. 2024 was a brutal year for IPOs, lagging 2023. The outlook for 2025 is stronger. And it's interesting because this goes back to the sort of, if we were to pick out a single thread of this conversation, it's that we're mirroring everything that's happening in traditional markets. The path to liquidity, concern that script traditional venture is gripping crypto in the same way. And and also similarly, we're hopeful that the liquidity potential of the new year is stronger than the preceding one in both crypto and in traditional markets.
Yeah, I think that that's correct. I I think it all kind of comes back to flows, as we were kind of saying at the end of the day. Um, I think there's also sort of been this, I would say, anti VC backlash within crypto Twitter. People don't like, you know,
How are you
uh,
dealing with that
low flow.
emotionally?
Yeah, I
How
take
are
it
you
very
dealing with
personally.
that? Are you okay? Did you talk to your
I'm coping with
therapist
it. I'm
about it?
talking to my therapist. Yeah. No. Again, I think this is probably good. I think VC is a very broad term, and I think there's a small number of firms that I would consider to be blue chip that I think most folks in crypto Twitter know and have been around for a while. But there's very much a long tail of VCs of kind of dubious quality that are with dubious levels of founder friendliness, that I think are also not healthy for long term success of the industry. So I do think those players ultimately, if you play short term games, I don't think you're going to be around for the long term. But going back to the question around flows, why are companies still launching tokens at large valuations? Well, it's like that's what the market is kind of rewarding. I think that is changing. I think we're actually kind of seeing that a lot of the sort of infra companies that are now launching tokens that feel very, derivative of existing projects, or maybe don't have a ton of traction, or just aren't doing anything novel, are actually not kind of getting rewarded by the market. But it's very much classic. You show me the incentives, I'll show you the outcome. I think we're starting to see the incentives shift, and hopefully shift more towards incentivizing um, real companies with PMF, with interesting technology, with novel products. But you can't blame people for kind of playing the game that they're shown, and think that's what people have been doing for maybe the past year.
One thing that I think has been challenging for applications is that up until this point, so much of activity is tied to this number go up, um, number go up technology. I feel like that meme has somewhat died down a bit, but I do wonder if 2025 will be unique in as much as the usage of some of these things will not be so tied to the price of whatever tokens affiliated with the given application. So if it's a Solana based app, like I would anticipate, I think historically, right? If Solana price goes down 70%, then probably usage on whatever derivative app that is down the same amount, if not more. I think that it will go down with price, but like maybe there will be a degree of bifurcation where if Solana goes down 50%, maybe usage on the app only goes down 40. I mean, that's the hope. That's what needs to happen.
Yeah, yeah. I think there's always going to be. I think of these things a little bit more like exchanges, in that Coinbase doesn't have a token, but obviously its volume is very much tied to volatility and price and interest in the assets that it offers for exchange. And so it's not so much that Coinbase equity is sort of driving activity, and more just, hey, if you want to offer trading for cryptocurrencies, it's a lot more fun and interesting to trade when there's new assets, they're volatile, never go up, etc. I think this current crop of applications look like that, where again, I cite Photon, for example, no token, but it's obviously facilitating the trading of tokens through this interface, and that alone is attractive when markets are volatile, but it's not as if there's a sort of liquidity mining component to it where people are being paid in tokens to go and trade the thing. And I think that is actually a great representation of product market fit. It's sort of showing this willingness to pay in the market. Polymarket, another example, it's a Dragonfly portfolio company, no token, just insane volumes, going into the election. And I think even I think coming post election at like a higher level than even I would have imagined, as people are sort of trading new markets and sort of finding new use cases for this product. But it's unincentivized, and I think that is also like a great testament to founders shipping through the bear market, building new products. It's not just hey, we go and farm this token and move on to a new chain or something like that. And I think it's overall a healthy shift for the industry.
When you think about what's in and out for companies, projects going into 2025, um, the different levers that they have to pull for customers acquisition, cutting through the noise, cutting, gaining mind share in a world where things like Fartcoin consume so much of our mind share. Um, KOLs, airdrops, the different mechanisms that historically have had their drawbacks, have had their pluses and minuses. What's in and out? Or
Mm.
will there just be sort of maybe reconfigurations of these existing tools?
It does feel like everything old is new again in crypto. Even these new projects, the ideas are often a decade plus old. You could say points is just the new,
Yeah,
liquidity mining, for example. I think that's somewhat true. I think every new
points another
iteration has
one.
some improvements from the last iteration. Um, I think there is sort of a recognition of kind of the stuff that I mentioned of you do some sort of points incentivization program to get a bunch of TVL and juice some metrics, and you launch a token, and it's all gamed. And I think that whole meta feels like it's very much on the way out. I think points as a concept are still going to be around, again, for the reason that if you're launching something that is a peer-to-peer exchange, or it's a network and it needs some sort of critical mass or liquidity to be useful, it makes sense to sort of subsidize that in the beginning and then wean off of it. This is how pretty much every marketplace starts. I don't know if you
And at
remember
least
$2 Ubers.
get a sense of your potential users. I mean,
Yeah.
that's a beautiful thing about points is that they serve as like a testing ground, as it were, before actually, going full on in and kind of blindly giving up some of your economics for to people whom there's no affinity or real relationship or connection.
Yeah, I think that meme has kind of died, that like you give away the token and these people turn into governance participants. But I think there's a maybe much more realist view, which is people who are that far out the risk curve, who are willing to try new products, who are willing to put capital at risk, who are willing to put their time and energy into something, should be compensated in some
Hmm.
way, and usually they are. Um, I think the other great trend has also just been the rise of I would say like Privy and Magic Link and other wallet as a service type of products, in terms of breaking down the barriers for new products to really go mainstream, or at least have a chance to go mainstream. Um, I think something like, again, not to keep chiming in on this, but like Polymarket, I think it's done a great example of going pretty mainstream for what is a true crypto product. It's not a crypto product in the sense of it takes stable coins and then we do everything on a database. It's all on chain. It's all transparent. It's all it's a true decentralized application. But most people using it, I don't think knew that at all. They just think, hey, I sign up with my email or my phone number, and I send in some money, and it's all sort of happening magically on the back end. And I think it feels like a meme, and it's something I'm very allergic to, having spent time in the industry. But it feels like now is actually the year when there's an opportunity for a true mainstream crypto app to come out that isn't just about trading tokens back and forth, or something like that.
What do you think it'll be?
I do think actually a lot of the like stablecoin remittance stuff has been going crazy. It's a little bit of a boring answer, but I think this is something that also the new administration takes pretty seriously as a way to, I think, further dollar dominance, but also just create like a true novel application that's just way better than what people in emerging markets are normally get access to. I kind of have this belief, or I think there will also be a viral mainstream, I would call it money game. This year, I think you see a few kind of sprouts in this vein from the past year. You see stuff like Crypto the Game. You see stuff like Fresa, where it's using crypto under the hood to offer some sort of novel competition or some sort of tournament with money at stake. And it's not sort of the traditional crypto gaming, quote unquote, of you launch a MOBA and the items are NFTs. I don't think that's really working. Maybe that will change in the future. This is more like, hey, what would it look like if we had a true global competition on crypto rails? I think we're starting to see, some more of those sprouts come through, and I think there's opportunity for that in 2025.
So, any closing thoughts? What should people pay attention to?
Yeah, I realize a lot of this conversation was maybe a little bit of a bummer, but I think the number one indicator for me, number one leading indicator is new talent coming into the space and starting startups in crypto. And I think for a minute there was a pause where after 2022, after FTX, it was very unpalatable for new people to come into crypto. It was very toxic, not a lot of capital. People were going to AI and things like that instead. I think that is starting to reverse slowly. I don't think we're at the kind of 2021 levels yet, but when I talk to smart young people, when I go to meetups, it feels like it's kind of picking up again. And that's kind of where the next unicorns are going to come from, the next decacorns are going to come from. So I'm excited to see more of that. And I think it's just more about more experimentation and quicker iteration. And I think that's kind of the name of the game when it comes to startups, and crypto is no exception.
Well, we'll have to have you back on in a few months to pick up where we left off. Thanks so much for taking the time.
Thanks for having me.
Of course. Mm-hmm.